Welcome everyone back to Lamb's Cryptoverse. We have a special guest today, Chuck Gafford. I hope I pronounced your name properly. So tell me a little about yourself, your background. Maybe it was in TradeFi, maybe it wasn't. And then later on, maybe you could tell us a little about your crypto journey.
Oh, sure. Thanks first of all for having me on, and I appreciate it. So yeah, my background has been in technology. I've been in software development for 25 years, mostly with big corporate systems and development. I worked for in the advertising space, so supporting online advertising, and before that, cable advertising at Discovery Channel, and then later on online advertising with AOL and a few other companies. Been out of the industry for about 10 years now, and been doing some consulting, some coaching, and crypto full time, basically.
Wow.
So
and you're doing this too. I don't know if it's reversed. You're running Practical Crypto.
That's right.
Over at Seeking Alpha, and it says here that you're 100% of your investments are in crypto. Is that true?
That's right, or crypto related.
Wow. Do you know Raoul Pal?
I've heard of him, yeah.
He's a big guy in Real Vision. He says that he's irresponsibly long crypto. That's you too.
Yeah. I used his line. One of my articles was about buying Tether and using it as an interest-bearing instrument. And the title of the article was, I'm irresponsibly long on Tether.
Oh, that's right. I saw that.
Yeah.
Very good. Yeah, there's so much to talk about. I mean, crypto, I follow traditional markets too, but crypto has so much to talk about. Do you follow traditional markets like stocks, bonds?
I do, mostly for the macro indicators.
Yes.
I think crypto is and will emerge as a separate category of investment, but for the time being, we are inextricably tied to the macro concerns of TradFi, and there's just no way around that right now.
You know what I always say, because we talked about irresponsibly long, I always say that Bitcoin is macro and macro is Bitcoin. Mm-hmm. and macro and Bitcoin and stocks are basically joined at the hip.
Yeah, I think crypto just acts like a very volatile NASDAQ stock. And it's got higher highs and lower lows. Ultimately, I think it'll disengage from that. It shows some signs sometimes of doing that, but then it correlates. The big indication for me was March of 2020 when the coronavirus scare really hit, and everything crashed, basically. Traditional markets and crypto went all at the same time, but that turned out to be a great buying opportunity.
Yeah, the narrative, and I didn't know crypto a few years ago, and so I was listening to other experts, and I try not to do that because they make mistakes too. And the narrative was that Bitcoin is digital gold and it is not correlated with the stock market or liquidity. And I found out the hard way. The good way is that it was correlated during COVID, March 2020, but I found out the hard way when the Federal Reserve started a regime change and crypto got cremated.
Yeah, exactly. Yeah, a lot of people thought it was an inflation hedge and could be counted upon, but it's not yet the case. I think longer term that'll play out. But so to get back to your point, I stay in touch with the markets for the macro indicators because, and I feel like what the Fed is doing is immensely important to understand where crypto is going.
Yeah, and I don't want to beat a dead horse, but I've got a chart here. Let me know if the charts are working. I've got a new application called Freeform. Have you heard of it?
I have, yeah.
Yeah, it's really cool, but sometimes it doesn't work. So tell me if you see this. I'm going to try and share this screen here, share screen. So do you see that?
I do.
You see the mind the gap? The chart?
Yeah, I see. There's a bunch of, okay, yeah.
Crypto.com, you should see one chart.
No, that's I see a screen full of charts. So
Okay,
economic
you're seeing
soft and
another
hard
one.
data points.
Okay, so maybe I should just go to that one. Stop share for now. Yeah, and let me go to this. Now, do you see it? No, not yet.
Not yet.
Yeah, I gotta put on my screen sharing. Yeah, this happened last time. It's a little difficult to do. Now you see it, right?
Yeah, I see the same screen. So
Yeah,
it's
so what I'm gonna do is try and blow it up. Now you see it blowing up, right?
okay.
Now, the one I want to focus on, let me just hide the sidebar, is this one here. This is a little dated, but it's amazing. This is from crypto.com. It shows you BTC or Bitcoin versus US financial conditions. And you
Right.
can see it's highly correlated. It basically moves up and down with the one of the financial conditions index. So it's pretty unbelievable. And one last point, and I won't beat a dead horse, is that and when you're looking at when you're dealing with looking at hedge funds or dealing with asset managers, what do they do? Like we know that Bitcoin is eventually going to be digital gold. It's going to be uncorrelated. But what are these asset managers doing? They don't know what this stuff is, crypto. They give it to the 20-year-old researcher analyst. They're like, here, and he tends to be the analyst that's following technology. It's just like he's like the hedge fund portfolio manager's like, let's give it to the kid that's following technology.
Right.
So what do? They put in the same bucket as their technology and Kathy Wood stocks. And that's why it's so correlated. So let me go to the next question because we really beat that dead horse. Are you now, or have you ever been a crypto maximalist?
Oh, that's a good question. Yeah, when I first got into crypto, I was a Bitcoin maximalist. And only would follow those guys. I thought Ethereum, when it was really building momentum, was just kind of a flash in the pan, a fad, and that kept me from buying it when it was $5 a coin.
It was you were watching it when it was $5.
Oh yeah, I saw it go from 5 to 50, and
So
then
let's take a step back. So when did you start looking into crypto? When were you aware of it? Who do you know? You remember when a friend of yours said, "Hey, what's this? What's this Bitcoin stuff?" Or ETH?
right. I bought my first Bitcoin in 2013 for $100, and that was just for experimentation purposes. And then did more research on it. And I remember watching a video from the Disrupt conference in San Francisco. I don't know if they still do them or not. It was thrown by TechCrunch, I believe, Disrupt San Francisco in 2014. And it had the Winklevoss twins on the board.
Yeah, Tyler and yeah.
And it had Balaji, Srinivasan, and it had Naval Ravikant on the stage. And Naval and Balaji were making such wonderful points about Bitcoin being unconfiscatable money that could grow into these categories. They talked about what if it got as big as Visa or MasterCard? What would that do? What would the market cap look like? What would the coin be worth? And then I started seeing Bitcoin as kind of the financial layer of the internet. And I became totally bought into it, basically. And then in 2014, I made a major investment in Bitcoin, and it promptly saw the value of my Bitcoin decrease by 2/3.
Wow,
2/3 that year, and it stayed there. It stayed there for over 2 years. Basically, it was mired in a couple $100 range, and that was tough, but it was good training. It was good training to test conviction, right?
Those are
Did I
war
really believe
stories.
it? Yeah. Did I really believe in it or not? So back to your question. So being a maxi at that time, it cost me the opportunity to look at other coins. And Ethereum was the big one back in the day. And I had actually turned a family friend on to Bitcoin, and he bought Ethereum.
Really?
Yeah, he saw the momentum. He saw people talking about it on Reddit. He bought Ethereum for a couple of dollars a coin, held it, and then was able to pay a down payment on a house because he made a wise investment. So I was happy for him, but not happy for me because of my narrow focus on being a Bitcoin maxi at that time. I missed the investment in Ethereum. So I just decided that's never going to happen to me again. I'm going to look at all these coins and evaluate them as their value going forward, or even just a speculative investment. You know, if the coin doesn't have a huge future, but we know that a lot of people are flocking into it as a meme stock or whatever, a meme coin, you know, why is that, and how long can that continue, and can I make money off of that?
You know, Elon Musk, he's a very controversial, if not crazy person, but I really admire him. And he said something really unique I never heard of about a meme coin. I avoid meme coins. I'm more of a long-term investor. But he said something very, very unique. He said, what if a coin starts off as a meme coin with no use case or anything, and then it turns into a highly valuable blockchain platform, like like an operating system. He likes these mind experiments, you know.
Yeah, I think we're so early on, we can't really know all the winners. We don't know. I mean, when the internet launched and it started gaining popularity in the 90s, how could anyone anticipate voice over internet Zoom meetings? And
Ride
how could
hailing,
anybody,
Uber,
Venmo, Facebook, Twitter, all these things? They were just, you know, they started out very modestly, and you never know how the technology is going to evolve. Yeah, I stay away from like the Doge coins and the strict meme coins, but I do look for three classes of investment in crypto, and that is the blue chips like Bitcoin and Ethereum, the up and comers. A couple of years ago, that would have been something like Solana.
the ETH killers.
Yeah, the ETH killers. So I do have an investment in Polkadot. And then I look for microcap coins that basically don't have much coverage right now, but have some utility coming up that could be the next Solana or could be the next Polkadot, but they exist in a microcap form right now.
So before we drill down into some, because I do want to ask you about the layer ones and some of the microcaps, I want to talk to you about the tide. It looks like we have a falling tide that's making all boats go down, reverse of the rising tide. So I want to ask you, before we could do any of the type of this investment, what's your framework for the markets in terms of global macro, interest rates, the Federal Reserve? What's your framework? People saying that, when was it, about a month ago, that the US stock market and crypto both went into a new bull market. So what's your framework for global macro?
Yeah, and I think the question that the salient question is the bottom end yet for crypto? I mean, that's the bottom line. So I listen to a lot of analysts that say they're pretty sure it is. They have their charts, they have their TA, they have their gut feelings. And then I listen to analysts that say, you know, we haven't seen the worst of it yet. And then I look at the figures, and one of the big areas that I'm tracking is total U.S. household debt.
You mentioned that to me.
Yeah, and that's through the New York Fed publishes quarterly data, And we're seeing an uptick in debt across the board, mortgage debt, auto loan debt, educational debt, personal credit card debt. And we're seeing delinquencies, serious delinquencies where accounts are 90 days past due. They're all ticking up. All categories are ticking up. And I think this is kind of part and parcel of the Fed raising rates, and the days of cheap money are over. And anybody that has an adjustable rate mortgage is going to be hurting. Anybody that has a huge balance on their credit card is going to be hurting. I just got a notice for a credit card that I hardly use. They just increased the interest rate to 29%. This is like a
Wow.
store card that I had. I don't use it, and I think overall the credit card rates are over 20% now on average.
Maybe Elizabeth Warren should spend more time looking at credit card interest rates rather than attacking crypto.
Yeah, that's a really good point. What is she deflecting from? Would be my question.
So,
But I think I have friends that I know that have enormous amounts of money on credit cards, and we're talking more than $15,000. And now they're in a situation where interest rates are going up on those credit card debts, and the interest is going to be rising faster and faster, and they're never going to be able to catch up with the payments. And I think in a market environment where you've got the cost of goods and services inflating at a tremendous rate, and people aren't willing to sacrifice their lifestyle, they're going to go into more debt to try to retain the same quality of life.
What's funny? It's like squeezing a balloon with hedge funds and consumers. They're going to figure out how to get more debt no matter what. For example, I don't know if you know this, in certain parts of the consumer market, because I researched consumer debt because you and a few friends of mine were asking me that question, because I think we differ in this slightly.
Mhm.
I've seen the consumer. What I see from the consumer data is that the consumer is strong, but some of that data is changing. And here's some examples about consumer leverage and squeezing that balloon. In terms of mortgages, most mortgages now are fixed rate. You don't have too many adjustable loans. You don't have too many equity loans, second liens, but the consumer has switched. They've moved from taking loans out via adjustable rate mortgages and equity loans to consumer credit card loans, auto loans. And I could show you here if this works. I have data here from that Freeform report that has the consumer market in certain areas of consumer market. Can you see it?
No, I don't see it yet.
You don't see any? Okay, here we go again. Let me just click on it again.
Yeah, nothing yet.
Let me hit new share. Let's try this one. It should work now. You see it now?
Yes.
Sorry about that. But so basically, I've got a few things of data. Basically, what I'm seeing is that consumer debt compared to GDP is actually quite good. And there's been a lot of savings that occurred during COVID. And there's a report from Statista, I won't open it now, that actually shows you that data. But then supporting your point, if you look here at subprime auto loans, that delinquency rates shooting up.
Mm-hmm.
And then if you look at, this is your point here, on the right here, credit card debt in the United States is starting to shoot up. And this is through the third quarter of 2022. If you include what you just said, higher loans and higher interest rates, we probably hit a new high here. So it looks like overall, because a lot of this debt has been mortgage debt, and because there was a lot of savings during COVID, I think the consumer is still in good shape, but it's changing quickly. So I think we're differing a little there in terms of that.
Yeah, I mean, any set of data will give you kind of probabilities, and it's just that I've been in the situations before where it was time to buy the dip, and the question became with what, because I didn't have any dry powder. So now it's just a matter of, okay, I have the dry powder in case there is some kind of a major retracement, a major crash here. Nothing is certain, and I certainly hope nothing happens, but the way the economy is going, I think the Fed is going to keep the pressure on until something breaks, basically. And I don't know whether that's educational loan default. I don't know whether it's mortgage related or credit card related default. I do know that in the UK, 40% of the mortgages are adjustable rate. So there is a huge potential trigger there. So will that be enough to trigger, a crisis in that country? Will it spill over? Is it going to be credit card debt in the US? I don't know what it might be the trigger, but I just suspect something's going to happen over the next year and a half. There's a lot of dry tinder lying around waiting for a spark, right? And then you could see the markets react very unfavorably.
Yeah, I agree with you on that point, 100%. Do you follow James Bianco?
No, I don't.
Yeah, he does his own he has his own consulting firm. He's really into the market now. He used to be more of an economist. Now he's more of like advisor to asset managers. And he talks about that all the time, that first of all, the market is connected. Maybe not crypto. Crypto tends to be more disconnected, and you got the insiders and people that play crypto that are more connected. So when Celsius goes bust, and I'm sorry, when Terra Luna goes bust, it tends to affect more the crypto people. But going back to what James Bianco and you said, he thinks that because everything's connected, it's a global world, that as the Fed keeps raising rates, something's going to break. Whether it's a hedge fund or a pension fund overseas in the UK, that almost happened, right? That happened almost 6 months ago. Or whether it's something here, the consumer break, and something will break, and that's going to really affect us big time. And I think that's what the Fed's goal is. I don't think they're doing it intentionally, but they need to raise rates until the labor market weakens. If the labor market doesn't weaken, because the problem is the first half of cutting inflation from last year to this year was easy, and that was that was goods, energy, oil, natural gas, jet fuel, grains, fertilizers, lumber, these started coming down. The second half of the decline in inflation is going to have to do with wages, and the only way to get that type of sticky inflation down is by getting the unemployment rate to go up, and having people lose their jobs and cause a recession. So something's going to break. And if it's not overseas, it's going to be the consumer and the US economy.
Right. Yep. So the analysts I talked to, they're like, the bottom is in unless there's a black swan. But I'm saying there's more probability for something to break than just a black swan that comes out of nowhere. I think we have enough data to support the fact that we're kind of on thin ice here going forward, but we'll see.
So let's start talking about crypto so we don't run out of time. So I'm going to start talking about what we talked about earlier about overall market. But before we get started, I tend to be more of a fundamental analyst, but I do combine sentiment and technical analysis. I believe in all three. I'm counting them as three categories. And then, I use global macro too, as well as bottoms up. So my point to you, my question is, since you're following some micro cap coins, I should say, do you use technical analysis, or do you consider it astrology for men?
Yeah, no, I'm not a big TA fan. Um, Probably reading the tea leaves is the best we can do. There's so many of these projects out there that you can spend a lot of time, but just understanding a little bit about what the coin's function is it in a healthy ecosystem, that kind of thing. And yeah, the rest is kind of like, it is a bit of astrology to try to pick some. It's a little bit like the hedge fund, or not hedge fund, the venture capitalist model, where you do a series of investments, looking for a couple of winners, a couple of big winners, and then you realize that maybe 8 out of 10 of your investments aren't really going to go anywhere, but you just hope for that 1 or 2 winners.
Have you heard of the Pareto rule, the 80-20 rule?
Yes, yeah.
It's funny you brought up venture capital, because this 80-20 Pareto rule comes up all the time.
Yeah.
Right? You get most of your gains from the top 10%, 20% of your holdings. Corporations, the top 20%, whatever, take 80% of the market share. I mean, it doesn't have to be exactly 80-20, but you get the gist.
Yeah, exactly.
Pretty amazing stuff. But
Yeah.
speaking of ICOs and things like that, I'm a little worried. I just saw an interview, my second interview in a week, with the SEC's Gary Gensler. And I think the only thing cryptic in the digital asset manager, I'm sorry, the digital asset market, I should say, the only thing cryptic is regulation. Like Gary Gensler, he's like shooting everywhere aimlessly. He's like doing regulation by enforcement.
Right.
And my thing is, I think we need like rules of the road. We need a level playing field so that all players could play evenly, and so that institutions could get in. What's your feeling about all this craziness going on with regulation? Look, I support regulation. I support strict regulation, but I think we need it from Congress. What's your view?
Yeah, and I totally subscribe to that point of view as well. And I mean, you could even make the case that perhaps the SEC shouldn't be regulating crypto. Maybe a separate agency needs to be put together for that. I think what Gensler is doing has been described as the one tool model, where if you only have a hammer, everything looks like a nail. So
Yeah.
to me, it looks like he's trying to assemble it, or trying to amass as many fees as possible. And he went after BlockFi for 100 million. He goes after these large, Kraken, I think, did a $20 or $30 million fine. And you wonder about Ripple, the lawsuit against Ripple. Probably one of the most well-financed companies out there. Is that just, why did they pick Ripple to launch a lawsuit against? Is it because they have deep pockets and they could pay 100 million plus for fines? Maybe on 500 million, maybe $1 billion fine. I think in some ways Gensler feels like the more money he brings into the SEC, the more successful he is. And perhaps he has greater ambitions to be treasury secretary. So yeah, I don't know. We all, I think a lot of us had high hopes for him when he came into office, because he knew crypto. He used to teach crypto classes at MIT, but he's been very anti-crypto, as far as basically people or companies, certain companies would be crazy to open up business here in the US, because it's so difficult. He's making it so difficult for companies to thrive here. And a lot of that is picking on the most well-regulated, the most well-behaved companies, and totally missing the ones like FTX, which were the worst offenders.
Yeah, I used to follow, and I still do somewhat, stocks. And actually, in my previous life, I worked for two major commercial banks, and I used to do some almost like forensic accounting type work.
Hmm.
And there was so much fraud that went on. That still goes on in the stock market. And the SEC did nothing. You
Yeah.
remember the Bernie Madoff case? Someone, I forgot his name, can't remember his name right now. You probably know his name. He reported what Madoff was doing to the SEC, and still the SEC did nothing.
For years, I think he was trying to whistleblow on that.
With exactly. And I almost feel, I hate to say this, but it seems like everyone, not just crypto founders, have themselves in there, have self-interest in mind. It seems like Gary Gensler is self-funding his agency so he could take more control of the digital asset market. I don't know what he's doing.
Yeah.
It just doesn't feel right. I can't put my finger on it. I understand and agree with a lot of what he's doing. Like he wants companies to do this financial disclosure, things like that. I agree with that. But why do we never hear him say that he wants Congress to do this? Like if you hear Jerome Powell, when he has his press conferences, and there's a question to him, a lot of times he says, it's not in my lane. I'm staying in my lane. I've got two missions. Everything else goes to Congress. He says things like that.
Yeah.
But Gary Gensler never says that. It's like he says, oh, I'm inviting these crypto founders and companies to come in and speak with me like he's a nice guy. And then he backstabs them. He did that with Coinbase. So yeah, I just don't get it. But you know what? Since we're running out of time, let's segue to Ripple.
Sure.
I'm one of those people. I looked at Ripple fundamentally, and I don't like it at all. I know your case is, I guess it's a sentiment point of view that once this SEC lawsuit is finished, which is supposed to be in the next few months, maybe this month, that the shares the coin's going to rally from whatever it is, 35 cents up to whatever. So I think that's your viewpoint. And ODL's the on-chain liquidity, ODL is doing pretty well, I guess. So I think you're more bullish. I'm very bearish on this, on Ripple. I think, and to answer your question, why the SEC is going after Ripple and not XRP and not other coins is, I think that Ripple was an egregious case where the Ripple Corporation owns a huge amount of these coins, like 50%. And the founders and investors during ICO owned like 99%.
Mhm.
So this is to me like a pure pump and dump. And I feel that Ripple Corporation uses all that money to advertise and manipulate the coin. It seems very much like a pump and dump. So I'm very much against it. I don't feel like there's a use case. There are many, I'm trying to look at my notes here, trying to find the term 20, I don't have it here, but I think it's called ICO 20022. Basically, there's a lot of competitors like Stellar and even layer one coins that are competitors to the XRP. So I feel like there's a lot of lack of integrity from the whole Ripple team, and it's a very low use case for XRP. So I'm very much against XRP, and I put out a video 2 months ago, I guess it was, where I said I do not support XRP. So you support XRP because of the sentiment? Is that how you feel?
Yeah, I don't believe it has long-term value, and I've done a lot of research, and that's really why I wrote my first article on Seeking Alpha. That was back in March of 22, because I had done so much research trying to understand if it actually had all the trials and usage and connections to these institutions that I would see people meme about. And the more I dug, the more I found that it was a lot of misinformation, and that the Ripple team would not really clarify anything. They benefit by retail investors believing that, for example, that the Bank of England is going to use XRP for their CBCD. And that was just a recent, another recent rumor that came out that I saw a lot of influencers pushing, and I wrote about that in my last article in February. But it turns out that that's not, there's no evidence for that, and that the Bank of England looked at Ripple as part of a trial in 2017 that has been long since over. And they, the current documents that have come out, they've specifically named other networks like Avalanche to be more in line with what they're looking for as far as building the CBCD. So kind of separating the error from the hype here is important. I used to try to debate with the XRP army on Twitter, and they really got nowhere about it. So I just decided, well, okay, they're so strong in their belief that this coin has a huge future. And there's actually some hedge funds that have published numbers that XRP is going to go from anywhere from $10,000 to $35,000 a coin, which is just ludicrous. It's crazy hopium, but people believe that. So there's a, in some aspects, XRP is a retail meme coin that has it has limited institutional use. And I've kind of documented where it is used. But some of that is Ripple's marketing, where they would pay people to use their product, to use XRP. And to me, the real question is, what is the on-demand liquidity usage, and is it going up? And basically, from the information I've been able to research, it's still very, very small compared to Swift, which is their main competition. XRP does not compete with Bitcoin. It competes with the Swift network and other payment rails for banks, and they are not making that much progress. But in the meantime, it's been suppressed because of this SEC lawsuit. It has not enjoyed the same rise as the rest of the crypto industry, the coins. So I think when that pressure comes off with the settlement, there's going to be a 2 to 3x, 4x, 5x spike in the price, and then I'm going to be positioned.
You have to get going.
Yeah,
we're running out of time, but thanks for appearing on Lamb's Cryptoverse. And I want to continue this with you because there's so much I have to say, and I have a lot of responses to that. I did read your piece, and I look forward to hearing back from you in the next week or two if you're interested. Thank you.
That sounds great. All right.
Take care. Bye-bye.